I'd like to welcome in Scott Bauer. He's the CEO of Prosper Trading Academy. He's joining us for a look at a few retailers ahead of tomorrow's retail sales report. Scott, welcome to Midday Movers. Looks like you've got Nordstrom's, Macy's, and JCPenney on your radar. Let's start with Nordstrom. Ticker symbol JWN. Ahead of retail sales tomorrow morning, what are you looking at?
You know, I always look at Nordstrom and actually TJ Maxx, and I know we're not going to talk about that one, kind of as best in class here. And I think it's because, everybody thinks of Nordstrom as, high-end retailer, but the Nordstrom rack, right, the lower end has really what has not only kept this thing afloat, but has really, helped the bottom line here. And, I like JWN. I love that the consumer has remained strong, not only through the holidays, but even into the beginning of the year here. And until we see some change there, I love to go with a best-in-class retailer, and I think JWN fits that bill. From a technical standpoint, if you look, Ben, back to, I think, around the Thanksgiving time or so, we formed a golden cross here, technically, where the 50-day moving average came above the 200-day moving average. Very bullish sign. And ever since then, it has really just stayed. Now, it's sold off a little bit over the last week, 10 days or so, but I like this stock. I really do.
Yeah, it sounds like you do. I can see why, Scott, especially after earnings. They've seen some nice moves higher. It looks like back in the end of August, they got a lift from that 25 low into their last earnings report back at the end of November, where they got a lift from that $34 level up to the $42.50 you mentioned recently. It does look like they've come off a bit more sideways, 37-ish to $42.50. So we'll see if they can continue that move higher with a breakout to the upside. You've got a couple more on your radar, though, as well today. Macy's, what are you seeing there?
I don't know if that sums it up or not.
It does.
You look at the charts here, and it's just been a slide, right? I mean, it's like a water slide. You go to the water park, and it has just been straight down almost. Now, you look technically, and you can make a case that maybe the stock has actually held some support in the 15 and a half area or so. But there's closing more and more stores. I'm not sure that the footprint that they have, the real estate that they have, is worth what they think it's worth. And this is one I'd stay away from.
Yeah, well, you're not alone. Investors seem to be sharing in that sentiment, Scott. Currently trading down on the day by about 2%. And as you mentioned, after a bit of a slide down to 14.11 last fall, they've really been stuck between 18 and 14. Not a lot to get excited about there. I can see why that was your reaction when I brought up this name. Yeah. But if that's your reaction to Macy's, Scott, I can't wait to see what happens when I bring up JCPenney, ticker symbol JCP.
Well, let's see. At 72 cents, I can go get a cup of Starbucks, and maybe with my change, I can go buy, a share of stock here in JCPenney.
Is this a lottery ticket at this point?
There's no question it's a lottery ticket. And I think the only thing, and I'm not even sure how many stores are actually left. I haven't seen a JCPenney in my area in a very long time. But the only thing of any value here could be the real estate. Maybe you get someone coming in, on some sort of upturn that wants the space, that wants the land. Maybe it's worth something. But other than that, it's absolutely a lottery ticket.
Yeah, Scott, I was joking around with Ben Watson, the chart master, yesterday. We were talking Burlington Coat Factory. I said the last time I was in one, I also stopped by a Zayre, a Venture, and a JCPenney all in the same trip, but that was 25 years ago. Let's move on because we've got some companies set to report quarterly results. Let's talk Mattel, Expedia, and NVIDIA. Which one are you dialed in on most, first and foremost?
I really like Expedia, and I think I'm going against the grain here because there's so much concern, not whether they're going to deliver numbers, top or bottom line, compared to expectations, but what they may say because of the coronavirus and how that may impact sales, bookings moving forward. I'm going to take the opposite side of that.
Okay.
And from a pure reward to risk standpoint here, if you look technically in this chart here, after the big debacle, where this thing got hit in November down to, 95 or so, we've made a really, really nice comeback here and put in some sideways trade, right? Kind of where we're trading right now, 108, 109 area, which is also the bottom of the 50-day moving average here. So to me, I look at this, and if there is no hint of any negativity moving forward with guidance at all, this stock has a lot of room to run to the upside. If you look at that big major gap area that it made back in November from around, 132, 133 area, that's all dead space. That's an area that traders look at called a gap. I'm not saying it's going to fill that gap on this print, but what I am saying is I think there's a lot more upside here on a decent report with no negative guidance than there is a downside. So I really like a very, very inexpensive upside, kind of move going into the print.
All right, we'll continue to watch these names. Scott, a great breakdown. Appreciate you bringing them to our attention and taking time out of your afternoon to join us here on Midday Movers. Much appreciated. Scott Bauer, the CEO of Prosper Trading Academy.